Welcome to Forex Mastery. From Zero to Hero. The ultimate series where we take you from absolute beginner to confident trader, one step at a time. Whether you're just getting started or sharpening your edge, every episode brings you closer to mastering the charts, the mindset, and the strategy. This is your journey, and we're walking it together. Before we begin, remember, this content is for educational purposes only. Trading involves risk, and there are no guarantees in the Forex market. Always use proper risk management and never trade with money you can't afford to lose. Today, in episode 11, we're going to master a foundational yet often misunderstood tool, trendlines. If you've seen traders draw diagonal lines on charts and wondered what they're really doing, or if you've drawn a few lines yourself but didn't know if they were right, this episode is for you. Let's start at the root. What is a trend line? A trend line is a diagonal line that connects two or more price points and then projects into the future. Its job is simple: to help us visualize the direction and strength of the market's movement. It's one of the simplest tools on your chart, but when used correctly, it becomes one of the most powerful weapons in your trading arsenal. In an uptrend, we draw trend lines by connecting the higher lows, the points where price pulls back, finds support, and then continues higher. These lows form a staircase pattern, each one higher than the last. When we connect those steps with a line, that's our uptrend trend line, and it acts like a dynamic level of support. In a downtrend, we do the opposite. We connect lower highs, the peaks where price rallies, stalls, and then drops again. Those form the descending staircase of a downtrend, and the trend line becomes a level of resistance. But drawing trend lines isn't just about connecting dots. It's about telling a story. The story of supply and demand, of who's in control, the buyers or the sellers. Every point you choose on the chart reflects real market emotion: fear, greed, hesitation, or confidence. The better you get at recognizing these reactions, the more powerful your trend lines become. Now here's something important: not all lines are valid. A proper trend line needs at least two significant price touches. Ideally, we want three. That third touch is the confirmation. It tells us the market respects that line. Think of it like testing a bridge. One step might be coincidence. Two steps show potential. But three steps without it breaking? That's trust. Imagine you're looking at the EUR/USD on the 4-hour chart. You see that price bounced from 1.0800 to 1.1000, then pulled back to 1.0850 and bounced again to 1.1050. Now you connect those two lows, 1.0800 and 1.0850, with a clean line. Price comes down again and touches that line near 1.0900 and bounces. That's your third touch. Confirmation. That trend line is now your dynamic support zone. And this is where things get exciting, because now, you're not guessing. You're waiting. You're stalking. You're using patience as your edge. Instead of reacting to price, you're letting price come to you. So how do we actually use trend lines in our trading? First, we always start on higher time frames. Daily, 4-hour, even the weekly chart. These trend lines matter more because more traders are watching them. More eyes means more reaction. That's just how markets work. If millions of traders are seeing the same line, there's a higher chance that price will respond to it. Once we have our major trend lines drawn on the higher time frames, we drop down to lower ones, 1 hour, 30-minute, or 15-minute charts, to find entry setups. These might include candlestick confirmations like bullish engulfings, pin bars, or inside bars. Or structure-based signals like break of previous highs or lows, pullbacks into zones, or price compression near the trend line. Let's say you see price approaching an upward trend line on the 1-hour chart. As it gets close, you notice the candles getting smaller, the wicks getting longer. Buyers are trying to step in. Then a bullish engulfing candle forms right at the line. That's a clear sign of buyer interest. With proper risk management, this could be your entry, with your stop just below the trend line and your target at the next swing high. But trend lines don't just help us get in. They help us stay out too. If price is in the middle of nowhere, not near a trend line, not near support or resistance, it's telling you to wait. And that waiting is part of the game. A good trader doesn't always trade. A good trader prepares, watches, and acts only when the odds are stacked in their favor. Trend lines can also help you spot trend breakdowns. These are powerful signals. Picture an uptrend with a well-respected trend line that's been tested 3, 4, even 5 times. Then suddenly, price breaks through it with a large red candle, no hesitation, no wick. That's your first signal. If it retests the underside of that line and fails to break back above, that's confirmation. The buyers have lost control, and the sellers have taken over. That's the kind of setup that often leads to big moves. Now let's talk about the false breakout, the enemy of every trendline trader. Price pokes through the trend line and then quickly snaps back. If you jumped in too soon, you get trapped. To avoid this, you need confirmation. Wait for a candle to close beyond the trend line, not just touch it. Look for momentum. Volume. Structure breaks. Let the market prove the move. Another advanced use of trend lines is in confluence trading. This is when a trend line intersects with another element, like a horizontal support zone, Fibonacci level, or a moving average. The more reasons price has to react at a certain area, the stronger that zone becomes. That's when you get those explosive moves, when multiple tools say the same thing at the same time. Now, let's zoom out for a moment. Why do trend lines even work? After all, they're just lines we draw on a screen, right? The answer is psychology. Markets are moved by people, and people are predictable. When traders see a trend line being respected again and again, they begin to trust it. They buy near it. They sell off it. It becomes a self-fulfilling prophecy. That's why technical analysis works, because millions of traders are watching the same things. You're not just drawing lines. You're reading human behavior. You're interpreting crowd emotion. Every bounce is a decision. Every breakout is a shift in sentiment. Trend lines give you a direct window into that world. Now let's do a quick recap of what you've learned in this episode. You now understand what a trend line is and how it helps you see market direction. You know how to draw valid trend lines using 2 or more price points, and how to confirm them with a third touch. You've learned how to use trend lines on higher timeframes for structure, and lower timeframes for entries. You understand how to trade bounces, how to catch breakouts, and how to avoid traps with confirmation. You've also explored how trend lines reflect mass psychology and how to combine them with other tools for confluence. This is a core concept that will serve you throughout your entire trading journey. Whether you're trading naked charts or using indicators, trend lines will always offer clarity, especially when the market gets messy. Remember, we're not here to trade just for the thrill. We're here to trade with precision, with purpose, with a plan. Trend lines give you that plan. They bring discipline to your chart. They help you filter noise. They show you where the real opportunities are. And most of all, they teach you patience, the most underrated skill in trading. In the next episode, we're moving deeper into market structure. You'll learn how to spot key moments where the trend truly shifts, using concepts like break of structure, change of character, and internal structure. We'll decode what these mean, how to spot them in real time, and how to use them to enter and exit trades like a pro. If trend lines show you the path, market structure tells you when to take the first step. You're getting sharper, more focused, and more in tune with the market. This journey is just getting started, and you're already ahead of most traders out there. Stay locked in, and I'll see you in episode 12.